Recursion Pharmaceuticals, trading under the ticker RXRX, is currently priced at $6.99, marking a powerful intraday surge of $1.13, which translates to a remarkable 19.32% gain for the session. Now, seeing a volatile biotech stock like Recursion pop nearly 20% in a single morning might lead many to assume this is just another fleeting, news-driven spike that will fade by closing bell. But that initial assumption overlooks the much more significant undercurrents at play here. This isn't just a reaction, it's a potential repricing event driven by a convergence of technical strength, institutional validation, and a growing realization that the company's AI-driven drug discovery platform is moving from a futuristic concept into a tangible asset factory. The market expectation has long been that Recursion is a high-risk, cash-burning venture with a distant, uncertain payoff. The reality unfolding today suggests that the timeline for that payoff might be compressing, and the market is scrambling to adjust its valuation. Most observers have bucketed Recursion with other speculative names in the biopharmaceutical space, companies with promising ideas but perpetually dependent on capital markets to fund their operations. The common belief is that you buy these stocks on positive trial data and sell them before the next equity dilution. And for a long time, that has been a reasonable way to view the sector. However, this perspective is becoming dangerously outdated when applied to Recursion. The challenge to this old way of thinking is that Recursion isn't just a traditional drug developer. It's a technology and data company first, and a pharmaceutical company second. Today's aggressive buying isn't just betting on a single drug candidate. It's a bet that Recursion's core engine, the Recursion OS, is creating a sustainable competitive advantage that can produce not one, but a portfolio of potential therapies faster and more efficiently than human-led research ever could. The market is slowly waking up to the idea that this isn't about finding a needle in a haystack. It's about building a machine that can analyze the entire haystack at once. Let's break down the mechanics of today's price action. The stock opened at $6.22, already gapping up significantly from the previous close of $5.86. That initial gap indicated strong pre-market interest. But the momentum didn't stop there. In the first hour of trading, the stock rocketed to a high of $7.07 on exceptionally heavy trading volume. This isn't the pattern of retail investors chasing a headline. This is the footprint of institutional capital. High-volume accumulation in the opening hours of a session often signals that large funds are building positions based on a fundamental reassessment of a company's prospects. The catalyst appears to be a recent announcement regarding progress in their collaboration with a major pharmaceutical partner, showcasing how their AI platform identified several novel targets in fibrotic diseases. This isn't just another press release. It's a proof point. It provides external validation from an established industry player that Recursion's technology works in the real world, de-risking the entire platform in the eyes of the investment community. This move is also occurring within a broader context of renewed interest in the intersection of artificial intelligence and healthcare, a narrative that has been powerfully reinforced by tech giants like NVIDIA, which is a key partner and investor in Recursion. Of course, with any rapid ascent in a stock's price, we have to look at the other side of the trade, the short sellers. Recursion has been a target for skeptics for years, and for understandable reasons. The short thesis is straightforward. The company's platform is unproven on a commercial scale, its cash burn is substantial, and the path from a preclinical discovery to an FDA-approved drug is long and fraught with failure. Shorts are betting that the company will run out of money or face a critical trial failure before its technology can deliver a blockbuster product. Currently, the short interest in RXRX remains elevated, sitting at a significant percentage of the public float. This creates a fascinating dynamic. On one hand, it represents a pool of educated investors who are fundamentally bearish on the company's prospects. On the other, it represents a significant amount of fuel for a potential short squeeze. Today's 19% rally is undoubtedly putting immense pressure on these short positions. As the price climbs, shorts who borrowed shares to sell them are now facing mounting losses. At some point, they are forced to buy back those shares to close their positions, which in turn adds more buying pressure to the stock, driving the price even higher. This is the classic feedback loop of a short squeeze. For investors watching this unfold, it's critical to understand the data. You can track short interest figures through services like Fintel or Ortex, which provide data on the percentage of the float being shorted and the days to cover, an estimate of how many days of average trading volume it would take for all short sellers to buy back their shares. A high days to cover ratio can indicate a higher risk of a prolonged squeeze. We also need to watch the cost to borrow shares. A sharp increase in borrow fees suggests that the supply of shares available for shorting is dwindling, making it more expensive and difficult for bears to maintain or initiate new positions. What's your take on the rising short interest? Smart money or manipulation? Let us know your thoughts in the comments. Investors should be aware that while a squeeze can lead to spectacular short-term gains, they are notoriously volatile and risky to trade. The key is to distinguish between a fundamentally driven re-rating of the stock and a temporary, mechanically driven price spike. To understand the long-term picture, we need to look beyond the daily chart and understand what Recursion actually does. At its core, Recursion is using robotics, automated microscopy, and machine learning to conduct millions of biological experiments every week. Their platform analyzes how human cells react to thousands of different compounds, creating a massive proprietary dataset of cellular biology. This digital biology approach allows them to map complex disease pathways and predict which drug candidates might be effective with a speed and scale that is impossible through traditional research methods. Their business model is two-pronged. They are developing their own pipeline of drugs in areas like oncology and rare genetic diseases, while also partnering with giants like Roche and Bayer. These partnerships are crucial. They not only provide non-dilutive funding in the form of upfront payments and milestone fees, but they also serve as a powerful endorsement of Recursion's technology from the very companies that dominate the pharmaceutical landscape. The value proposition is simple. Recursion can help these behemoths fill their drug pipelines more quickly and with a higher probability of success, saving them billions in R&D costs down the line. Looking forward, the future for Recursion is paved with both significant opportunities and substantial risks. The primary catalysts will be data-driven. The market will be intensely focused on the clinical trial results from their internally developed programs. A single positive Phase 2 data readout could be transformative, providing definitive human proof of concept for their entire platform and sending the stock to new highs well beyond its 52-week peak of $12.36. Further expansion of their existing partnerships or the announcement of new ones would also be a major positive, signaling continued industry adoption of their AI-first approach. Conversely, the risks are just as pronounced. A clinical trial failure, particularly for one of their lead assets, would be a major setback, likely calling the predictive power of their platform into question and sending the stock tumbling back towards its lows. Macroeconomic factors also play a role. In a high-interest rate environment, the market tends to punish pre-revenue, cash-burning companies, and Recursion is no exception. The company's ability to manage its cash reserves and fund its extensive R&D pipeline without excessive shareholder dilution will be a key factor in its long-term success. So, when we synthesize all of this information, we return to our central theme of expectation versus reality. The expectation was that RXRX is a binary bet on a future technology. The reality, as suggested by today's price action and the underlying business developments, is that Recursion is building an ecosystem. It's an engine for discovery, and today's move reflects a growing confidence that the engine is not just running, but beginning to produce tangible, valuable output. The debate between the bulls and the bears is far from over. The short sellers are still betting on failure, while the long-term investors are betting on a fundamental shift in how medicine is created. The path forward will be volatile, with progress measured in clinical data points and partnership milestones. Today's rally is a significant battle won by the bulls, but the war for validation is an ongoing campaign. For investors, the key is to look past the noise of the daily fluctuations and focus on the core evidence, the science, the data, and the execution.